What's up? What's up? What's up, everyone? How you guys doing? Happy Monday to you. This is Monday Fun Day, and I'm Jeremiah Davis, aka the Funding Coach, coming to you live with some new funding tips. Um, so, today's topic: what you need to know about business funding. Listen, I put a lot of information out about different funding products, and some of these topics seem to be redundant, but I still get asked the same questions every day. So I want you guys to understand how business funding works, because the more you understand how business funding works, the easier my life is, right? If you can get your clients pre-qualified and get the selected, know exactly what those qualifications are for those particular loan products, so you don't waste your time, the client's time, or anyone else's time. And that is the gist of what we're talking about. This is also why I created the Business Funding Expert Certification course, um, and why by getting the course, by working with me, you're going to have a larger, more substantial understanding about how business funding works, right? Understanding how business funding works, right? In the course, I give you my 5-question formula to pre-qualify any business. By asking these series of 5 questions, you are doing a process of elimination of what loan products the client qualifies for or does not qualify for. So that's why the course is invaluable. The format of the course is invaluable. The 5-question formula is invaluable, and in essence, this is going to help you make more money, right? The more clients, everybody needs money, right? There are 33 million businesses in the United States right now, and there's 1 to 2 million businesses started every year in the United States, right? And majority of those still don't know how to access the premium business loan products, or building their business credit, or don't have their business credit to qualify for those premium loan products, right? It's really important to understand that business credit's purpose is to provide a business with the resources, the financial resources to sustain a uh, long-term existence, right? The number one, um, hold on 1 second. Okay, so the number one reason businesses go out of business is for lack of capital and credit, right? Access to cash and um, access to credit. So building business credit gives you access to more financial resources. That's the purpose of business credit, and that the business can have the financial resources that are separate from the business owner's social security number, and the separate. Okay, I mean, your business your business must grow past your personal credit, what your personal credit can take it to, right? Your business, if your business is solely reliant on your personal credit, it's going to be difficult for you to survive. Simple as that. All right. Because businesses are major expenses, right? But they have the potential to bring in major revenue. So you need to have all the pieces to the puzzle working to the best of your ability to succeed for your business or for your client's business. You want your clients to be able to have lines of credit, be able to get approved for business term loan, be able to get approved for SBA loan. be able to get corporate only financing, right? Those loan products require good personal credit, good business credit, and good business finances, right? A lot of those loan products require you to be in business for a minimum of 2 years to 3 years and have financial documents for those 2 3 years for the business, tax returns, P&Ls, balance sheets, all that stuff is lined up, right, together. In conjunction with, you need to have business credit, you need to have business credit comparable to the amount of cash that you want to borrow, right? This is not relatively a new, but it's a more used situation now, right? If business owners don't have comparable credit and they try to borrow $100,000, $250,000 without comparable credit, they're going to get denied, and all they're going to be able to get is a revenue-based loan. A revenue-based loan is like one step, two steps above a merchant cash advance, right? It's a little cheaper money, but it's still expensive money, but you can get larger amount. I commonly get people anywhere from $100,000, $180,000, $200,000, $300,000 in revenue-based funding, right? But it is weekly or monthly payments, and they're large payments, okay? But there's a strategy to use that money, right, strategically to generate more revenue, and the goal, right, when you get the money, get the business credit, build your business credit in 3 to 6 months, that you can qualify for a better type of loan, pay off that higher interest loan, and then still net some cash with the second round of funding. So this is my standard protocol. First round of funding, business credit building, second round of funding, right? First round of funding is revenue based, business credit building up to at least $100,000, $50,000, $100,000, comparable credit, being able to go to business term loan, business line of credit, business or corporate only finance SBA loan for $100,000, $150,000, $200,000. But having all those things working together, they got to all work in tandem together, right? You have to have you have to have 10 trade lines on your business credit. You have to have a low 5 bank rating score. You got to have a 680 higher personal credit score. You got to have make at least 20, 25, 30, $35,000 a month in your business to qualify for some of these additional loan products, right? So with our system, right, with the software that we use and that we also resell under the Black Label brand, right, as a white label for you, this is your template. This is your template, right? You want to get your clients in the pipeline. You want to get them the first round of funding, what we call is stopgap funding, right? And then that puts some money in their pocket right now, so they can start working on their business credit, right? Getting their vendor accounts, getting a secure CD that reports like a business line of credit, and start building their comparable credit, right? And stop using their operating capital as much and use their credit to buy their products and supplies with the vendor accounts, and to increase their bank rating score. A low 5 means that the business maintains a $10,000 daily average over 90 days. That way, you can then, the bank says you can afford this type of loan. You can afford the payments on this loan. If you are not a low 5, if you're in the 4s or the 3s, you're going to get denied for the premium loans. You can still go with the revenue-based loans, but that's back to the more expensive money. Okay, so it's very important that you understand the landscape in business funding. That's what the things you do not know. And right now, due to the economy and the higher interest rates that are raised by the Fed and all these things, banks have tightened in their restrictions on approvals, right? So a lot of people with good credit and good business finances are only getting approved for revenue-based funding, right? Because they don't have the 10 trade lines. They don't have the bank rating scores. They don't have the 3 years of financials or 2 years of financials. So you got to have all those things working together. If you got a 700, 800 credit score, you're making $400,000 or $500,000 a month, and you're trying to get more money to expand, but you never took the time to build business credit, you're most likely going to have to accept a revenue-based loan with a higher interest, right? But I'm going to explain to you how to utilize that money and then get ready for the next round of funding, where you get the premium loan products that are low interest monthly payments that can go with the terms of 3 to 5 years or so. Or if it's an SBA, it could be 10 to 20 years. Okay. So that's why it's important that you understand. All right. I can't tell you how many emails and phone calls I get about, I got a guy, I got a lady that needs funding. And my first question is what type of funding they're looking for, right? There's a plethora of funding options out there, right? And if you don't know which one to put them in, then most likely you're giving them inaccurate information, and then they're going away unhappy and disheartened. You have to develop a plan with your client to get them first round stopgap funding, build their business credit, take you 3 to 6 months, right, and get them into a higher or better or, quality loan product where they can have enough money to pay off the first loan, and as well as some extra to use for expansion, marketing, hiring, equipment, etc. So those are the type of things that is years of experience has taught me, right? And but even in this economy, it's more critical, right? Every businesses need money. They need access to credit. They need access to vendor accounts. They need business term loans or business lines of credit. All these other loan products, but they don't know what the qualifications are. They don't know what the criteria are, right? So in the business funding expert certification course, I only give you the 30 most popular business loans, right? Get a clear definition of each loan so you can identify it, right? But you also get the case study of the loan, right? The case study tells you a scenario about a business and how this loan applied to them, and then what the results of that loan was, right? Whether it be SBA, whether it be revenue based, whether it be accounts receivable, maybe purchase order or a contract based, So there's 30 different loan products in there where I'm giving you the description, I'm giving you the case study, I'm giving you the pros and cons of each loan, right? Knowing the pros and cons is going to better give you more equipped to educate your client on the potential reward as well as the potential risk of each loan. Okay. And they're able to make a more informed decision if this is the right loan they should accept. Okay. If they have more than one loan option available. Sometimes you only got one option and you have to, make that work. Okay. But then having that automated business credit system in the software that we utilize with live coaching, right? That's going to get them the whole purpose of the live coaching is to get them qualified for the premium loan products. That's our whole purpose. Getting the trade lines necessary, getting the vendor accounts necessary, building the business credit, um, building comparable credit. So as soon as they can get those things established, the sooner they can get out of these revenue-based loans and get into a premium loan product like a business term loan, a business line of credit, a business a corporate only financing, or SBA type loan. Okay, so that's why it is so vital. But also, we're adding a lot more features to the software, right? We're adding the UCC database. What's the UCC database tells us that when businesses had any previous loans before, current loans, as well as any outstanding loans, defaulted loans, right? Banks can banks can check your bank rating score in a nanosecond. Okay, um, but like I said, good strong business credit with all those things that you need for business credit, right? Good strong personal credit with your DTI under control, with a number of inquiries less than 4 to 6 months, with 680 plus, 670 plus credit score, right? And when you check all the boxes, you've got a better chance of getting approved for those premium loan products. That's the whole purpose of it, right? So me, my staff, our coaches, all of us, our goal is to get you qualified for a premium loan product as quick as possible. All right. So depending on the age of your business or your client's business, it could take you 4, 5, 6 months, right? If it's a new business, it might have to be take the first year to build that and then wait till they got 2 years of finances under their belt before they can get one of the premium loan products, right? Most of those loan products, you got to be in business for a minimum of 2 years. Now, there are some business term lenders out there that will work with you for after 1 year in business. But if you don't have at least 1 year in business, you're not going to be able to get any of those premium loan products. That's the truth. Okay. So it's very vital that you um, understand all the different nuances about business funding. And like I said, the course, you got the description, you got the case study, you got the pros and cons, and then you will have the requirements and a list of the most common supporting documents. You also going to get my 5-question formula on how to pre-qualify any business based on the yes or no answer to these 5 questions, right? They're not complicated questions. Credit, income, things like that, right? But I can decipher immediately by those 5 questions which loan product is most ideal for any client. Okay, so the course is we've sold quite a few of them, but there's still a few left at the discounted rate of $9.97. So if you really want the business funding expert certification course, you need to get it now, right? I think I'm going to roll out a 2 payment plan option this week, right? Where you will get half the course for the first payment, and then you'll get the second half of the course for the second payment. Once you make that payment, ideally, your first loan client pays for the course, right? I give a guarantee in the course that if you submit a completed loan package within the first 30 days, right, of $50,000 or more, then you're going to make your money back. Okay, I'm going to work with you to close your first loan and make sure you make your money back. But you have to bring the clients in. You have to pre-qualify the clients. So the course is ideal for you to have a well-rounded understanding of 30 different loans. Okay, I mean, there's I think five SBA loans in the course. There's everything commercial real estate, investment property, fix and flip. There's all the factoring programs, all the credit-based programs, all the asset-based programs, and equipment programs. So it's a large, there's 30 loans, 30 different types of loans. All right. Not only that, I get one module of one course. One of them covers 4. That's the business credit cards. You got business credit cards with PG. You got business credit cards with no PG. You got vendor cards, and you got store cards, business store cards. Right. That's sometimes those can be interchangeable, but a vendor card be more like buying that product from the vendor and making payments, or whether it was net 30 or net 60 or net 90 or 120. Or store card could be a cash credit card as well as a branded store card. So there are some slight differences in each of those types, from the personal guarantee card to the no PG card, and then there's different criteria to qualify for those cards. So that's just one course, okay, one of the 30. All right, though, all that, okay. So there, like I said, there's a plethora of funding products in this course, and it will give you a really good foundation on how business funding works, knowing the qualification requirements, knowing the supporting documents, knowing the credit score needed, knowing what the banks are looking for before you apply. Like, hear me well. Knowing what the bank wants, right? The documents they want, the credit they want, the income they want, the profile of the business owner to get approved for one of those loan products, right? So all the factoring is asset based. Credit is not a factor. Real estate, credit is not a factor. Obviously, the better credit you have, the better terms you get. But you can do investment property, commercial property, and with bad credit. Okay, as long as you have the resources to secure that property under contract, et cetera, et cetera. right? So I'm always finding ways to help the clients get to the best loan product for them, right? And a lot of times that requires them getting a loan product that's not really ideal right now, but it's the only option they have, right? But I try to reassure them that if you go this route, how are you going to do it? First thing you need to do is take the first several months to at least 1 to 2, maybe 3 months of payments and put them aside so you're not worried about making those payments every month or whatever the payment frequency is. Okay. And then at the same time, using the rest of this money to generate more revenue, to get those vendor accounts, make those purchases, right? So you need 10 trade lines. You can pick 10 trade lines within the software day one, right? And then if you do that, and then you're able to make that $75 to $100 monthly payment, purchase and payment, right? And 3 months, all 10 of those trade lines should be reporting to the business credit bureaus, and then that will check off one of those boxes to qualify you for one of those premium loan products, right? And if you're doing that and simultaneously leaving your operating capital in the bank longer for a longer period of time, will also increase your bank rating score, as well as using those vendor accounts and those credit cards um, responsibly, paying them 10 days before they're due is going to greatly increase your business credit score, but also they're going to give you incremental increases of limits on those cards, increasing your comparable credit, right? So vendor accounts, credit cards, even secure credit cards and lines of credit, all those things work in tandem and they go towards building your comparable credit. So you're accomplishing like three of those check boxes at the same time by following our protocol. That's what I'm talking, and that's what's going to catapult you or your client from a revenue base to a premium loan product of a business term loan, business line of credit, uh, SBA loan, or corporate only financing. Corporate only financing is what everybody wants, but nobody knows the criteria. We know the criteria. We make it available to you in the software, in the admin panel, as well as in the client portal. So you can really hone in and help your clients become bankable and get some of those premium loan products. And that's real. But okay, so don't wait any longer. Uh, we'll post a link to the landing page so you can get the course and stay tuned. Hopefully by the end of the week, I will have a two payment plan. But instead of the $997, it might be like, $500 two payments or something like that. But we'll let you know. I do also have financing. If you do need financing for the course, let me know. Hit me up, send me an email, send me a message, what have you, and I can check. I can run on my lending platform the financing, and if you need to finance $1,000, fine. But most likely you might get approved for $5,000 or $10,000, right? And you can use the rest of that money for whatever you need it to invest into your business, what have you. Okay, so anyway, I'm just excited. It's if you've been waiting, trying to figure out or get into the business funding arena, the business funding expert certification course is really ideal because you're not going to get that much comprehensive training on business loans and learning about 30 different types of business loans from anywhere else. There's no other course out there like it. There's none. There's real estate courses. There's different types of courses that some of these other lenders offer on their website or in their blogs and things like that. But there's none that offer 30 different loan products in one course. All right. We cover SBA, we cover credit base, we cover revenue base, and we cover or asset base, and we also cover equipment based loan products in the course. 30 different business loan options with descriptions, case studies, pros and cons, requirements, and list of most commonly used supporting documents. All right, don't delay. We'll post a link for the course here and like, follow, share, all the above. And I'll see you guys on Friday with Black Label CRM. My name is Jeremiah Davis. I'm the funding coach. Peace.